Welcome to DebtCircle Key Roundups. I am Vijendra.
And I am Leela. On today's episode, we have some important updates from the debt markets. First up, Magnum Ventures has successfully raised Rs 50 crores in debt at an 18% interest rate, a significant move in the current financial landscape. Meanwhile, Infomerics has revised the outlook for Sri Keshav Cements to negative, signaling some concerns about their financial health. And on a brighter note, CRISIL has upgraded the ratings for Ecoplast and removed their watch status, indicating improved creditworthiness. Stay tuned as we dive deeper into these stories and what they mean for investors and the market.
Magnum Ventures Limited's promoter has pledged 83,24,255 shares to secure an additional Rs 50 crores via 18% listed secured redeemable non-convertible debentures maturing in 2 years and 2 months. This raises their total secured debt to Rs 280 crores, increasing leverage significantly. The high interest rate reflects elevated risk perceptions amid market volatility. The security includes fixed and intangible assets of the paper division, plus current assets, with personal guarantees from 3 promoter group members enhancing credit support.
Market response is mixed, with short-term declines but a strong 5-year return of 254.17%, indicating long-term investor confidence despite recent pressures. Moving on, Infomerics has revised Sri Keshav Cements and Infra Limited's long-term outlook to negative, though the long-term rating stays at IVR BBB- and short-term at IVR A3. This concerns bank loans totaling 269 crores and 35 lakhs from Canara Bank. The negative outlook signals possible future credit stress and operational challenges. Infomerics now demands monthly no-default statements and quarterly financial updates to monitor progress closely. A downgrade would hurt Sri Keshav Cements' ability to service debt and raise capital. Market participants must track operational metrics and debt compliance to assess risk in the near term.
CRISIL upgraded Ecoplast Limited's long-term rating from BBB- to BBB with a stable outlook, and short-term rating from A3 to A3+. This reflects stronger financial health and better debt repayment capacity. Removing Ecoplast Limited from the rating watch means prior risks are mitigated, improving lender confidence and lowering borrowing costs. The stable outlook signals steady creditworthiness, but continued monitoring is expected to track any financial changes on new debt. So investors can expect improved access to credit and potentially more favorable lending terms, supporting Ecoplast Limited's growth plans.
Indus Infra Trust unit holders approved a 5,000 crore rupees fundraise through preferential allotment of units to Aadharshila Infratech, the sponsor. The vote ended June 9, 2026, with 99.96% in favor. Aadharshila abstained from voting on the related resolution, ensuring regulatory compliance. 96.97% also approved the overall fundraise, demonstrating broad investor consensus. This clear mandate, combined with strict adherence to SEBI regulations, reinforces investor trust and transparency, crucial for sustained capital inflow in infrastructure investment trusts.
Dishman Carbogen AMCs allotted 1,800 senior, secured, taxable non-convertible debentures totaling Rs 18 crores via private placement on June 9, 2026, as part of a Rs 150 crores plan approved earlier. These debentures are listed and transferable, maturing on December 9, 2027, with early redemption options, enhancing liquidity and appeal for investors seeking medium-term fixed income instruments. The senior secured status provides priority claims backed by assets, aligning with the company's strategic fundraising through rated structured debt to ensure investor confidence and regulatory compliance under SEBI rules.
Fincare Financial Services plans to raise up to 100 crores through non-convertible debentures, with a board meeting scheduled for June 15, 2026 to approve this. The funds will support growth or operations without equity dilution. This private placement via electronic bidding platform targets select investors, allowing Fincare to control debt terms. Market watchers should note the pending coupon rates and tenure details after approval, as these will impact investor interest and the company's debt profile. The key risk is Fincare's ability to service this increased debt and effectively use the capital to generate returns.
Indian government bond yields dropped about 10 basis points over the last 4 trading sessions, mainly due to the Reserve Bank of India's recent foreign inflow measures, not improved economic growth. By facilitating external commercial borrowings and non-resident deposits, RBI aims to reduce inflation pressures and risk premiums on yields without cutting policy rates. However, global factors like US inflation could still push yields higher if the dollar strengthens. So Indian bond markets remain vulnerable despite RBI's domestic support.
Mufin Green Finance has allotted 1 lakh secured non-convertible debentures raising 100 crores rupees at an 11% coupon rate per annum. The tenure is 15 months and 3 days, maturing on September 12, 2027. Listing on BSE Limited ensures liquidity, and the interest payments starting from the 12th month provide steady income. The secured nature, backed by hypothecated receivables, adds investor confidence amid current market volatility. The principal repayment is split into 4 equal installments starting June 12, 2027, continuing monthly until August 12th. That staggered structure aligns well with cash flow expectations, making it attractive for conservative investors seeking predictable returns.
Vikran Engineering allotted 40 secured non-convertible debentures totaling rupees 20 crores at an 11% fixed coupon, with a tenure of 2 years maturing on June 8, 2028 with monthly interest payments. The secured nature with a charge on current assets adds safety. Each debenture has a face value of rupees 50 lakhs and delays in payment incur an additional 2% interest per annum. Redemption is at par, funded from internal accruals or permitted sources. The 2-year tenure is short enough to attract fixed-income investors seeking medium-term commitments.
The government is set to sell a combined 60.72% stake in IDBI Bank, transferring management control to private owners, 30.48% from the government and 30.24% from Life Insurance Corporation. This move clears regulatory hurdles after the Reserve Bank of India's fit and proper assessment of bidders. IDBI Bank's financials support this transition, showing a 25% year-on-year net profit increase and net non-performing assets under 1%. Its balance sheet is 2.5 lakh crore rupees. Risks like bidding delays, union resistance, and regulatory issues remain, but this privatization is a key reform step.
The government increased gold import duty from 6% to 15% in May, raising basic customs duty to 10% and agricultural cess to 5%. This move aims to curb gold imports, which surged by over 81% year-on-year last April, to manage the expected current account deficit widening beyond 2% of GDP in fiscal year 2027. This duty hike comes as a strategic response to rising crude oil prices pushing the deficit higher. Market reactions suggest demand for gold will soften, supporting external sector stability despite global commodity price volatility.
PNB Housing Finance has allotted 50,000 secured non-convertible debentures totaling 500 crores rupees with a fixed coupon rate of 8.35% per annum and a 5-year tenure ending June 9, 2031. Listing these on the wholesale debt market of the National Stock Exchange ensures liquidity, while the secured nature with exclusive charge on book debts reduces investor risk significantly. Interest will be paid annually every June 9th starting in 2027, and there's a 2% per annum penalty above the coupon if payments default. This issuance helps PNB Housing Finance strengthen capital, and the steady returns at a competitive rate align well with current market demand.
Fitch Ratings assigned a B+ rating to IIFL Finance's $500 million senior secured notes maturing in September 2029 with a 7.60% coupon. The B+ is non-investment grade, reflecting higher risk. Governance issues and breaches in the microfinance subsidiary's loan covenants add concern, despite improved delinquency ratios since September 2025. Key covenants include a maximum net 90-day non-performing loan ratio of 5% and a minimum security coverage ratio of 1 times. A cross-acceleration clause means default elsewhere could accelerate these notes. This issuance signals IIFL's move into global debt markets under strict risk disclosures.
The Finance Ministry has asked banks for detailed data on gold metal loans starting from 2023, covering volumes, borrowers, and collateral. This follows a 24% rise in India's gold import bill to 71.9 billion rupees in fiscal year 2025 to 26. Industry suggests increasing use of doré gold processed domestically to reduce fresh bullion imports. Broader reforms under discussion aim to improve gold market efficiency and lower account deficit pressure, including limited exports, restricting cash purchases, and mobilizing household gold into formal finance.
Foreign portfolio investors have infused Rs 8,794.743 crores into government securities under the fully accessible route after tax exemption on interest and capital gains, boosting their holdings to Rs 3,32,000 crores. This tax exemption, effective retrospectively from April 1, 2025, removes previous long-term capital gains and withholding taxes. The Reserve Bank of India also expanded eligible securities to include all new issuances of 15, 30 and 40-year government bonds, with FPIs making up nearly 75% of net purchases in FR securities during April and May.
Pakka Limited raised 540 crores rupees through non-convertible debentures with a 16.95% effective interest rate plus promoter equity of 85 crores rupees. This funds debt refinancing and supports their shift to an asset-light business model. Despite a 13% drop in annual profit due to machine outages and pricing pressures, Pakka's food services segment grew, with quarterly revenue rising from 11.5 crores to 17 crores year over year. The key risk remains the high interest burden and operational disruptions. Investors will watch if Pakka can meet debt obligations without hurting free cash flow while scaling new capacity under Project Jagriti.
Adani Energy Solutions is acquiring IntelliSmart infrastructure for Rs 3,050 crores, boosting its smart meter portfolio to over 47 million units, making AESL the largest smart metering platform in India. India's smart metering market is rapidly expanding with a $30 billion opportunity, aiming to replace 250 million conventional meters to improve efficiency and reduce losses. IntelliSmart, founded in 2019, has over 22 million meters across key states like Uttar Pradesh and Gujarat. This acquisition also provides an exit for National Investment and Infrastructure Fund and Energy Efficiency Services Limited.
The Government of India and the Reserve Bank of India are pushing to include Indian government bonds in the Bloomberg Global Aggregate Index by mid-2026 to attract billions of dollars in passive foreign investment and improve liquidity in the debt market. Bloomberg noted concerns about operational infrastructure, delaying inclusion from January, but affirmed broad support for India's bond market development and promised an update by mid-2026. Given India's recent entry into other emerging market bond indices, this step could be a game changer, enhancing India's profile among global asset managers and increasing foreign capital inflows.
The Indian rupee strengthened by 0.2% to 95.1250 per US dollar, driven by Reserve Bank of India intervention and over $1 billion inflows into Indian bonds since last Friday. State-run banks offering dollars and conducting dollar-rupee swaps likely on RBI's behalf helped the rupee despite derivative pressures. Meanwhile, stable crude oil prices amid US-Iran tensions add volatility risks but haven't weakened the rupee, reflecting resilience amid geopolitical uncertainties affecting commodity markets.
NABARD is issuing bonds worth 70 billion rupees with a maturity of 3 years and 1 month, carrying a AAA rating from both ICRA and CRISIL. The issue starts at 20 billion rupees with a greenshoe option of 50 billion rupees, with the coupon rate to be decided after bids close on June 10th. On the same day, Bajaj Housing Finance is reissuing bonds maturing in May 2031, targeting up to 2,000 crores with an 8.25% coupon, rated AAA by CRISIL, and Muthoot Finance will raise 2,750 crores via 5-year bonds at an 8.65% coupon, rated AA plus by CRISIL and ICRA, reflecting robust demand for quality bonds in the market.
State Bank of India is set to join a global consortium lending up to $1 billion for Sun Pharmaceutical Industries' $12 billion acquisition of Organon and Company. This would be one of the largest outbound deals by an Indian firm and needs SBI's board approval. SBI's collaboration with Mitsubishi UFJ Financial Group and talks with other Japanese lenders reflect a strategic push to support large acquisitions. SBI's involvement signals a new era where government-owned banks actively participate in high-value international deals, reducing reliance on foreign or shadow lenders and strengthening India's presence in global markets.
Gold prices hit an 11-week low internationally, with US gold futures for August down 1.7%, settling at $4,213.40 per ounce. MCX gold futures fell below 1,50,000 rupees per 10 grams, driven by a stronger US dollar and geopolitical tensions. The rise in crude oil prices and the stronger US dollar are intensifying inflation worries, pushing market expectations toward a Federal Reserve interest rate hike by December, over 70% probability, which typically dampens demand for non-yielding metals like gold and silver. Domestic silver prices also dropped sharply, with MCX silver July futures down by approximately 4,500 rupees per kilogram, opening near 2,34,000 rupees. Analysts highlight support for gold at 1,49,000 rupees and resistance at 1,51,000 rupees.
The Reserve Bank of India has ordered banks to complete a board-approved gap assessment on frontier artificial intelligence risks like Claude Mythos by June 30th. They must also create a time-bound action plan addressing cybersecurity vulnerabilities and conduct AI-driven threat simulations. With models like Mythos able to detect zero-day vulnerabilities, Indian banks must enhance their cybersecurity frameworks to protect customer data and financial assets promptly. The Finance Ministry and Ministry of Electronics and Information Technology are coordinating globally to monitor AI cyber risks. Banks must safeguard customer data and financial assets under this new compliance timeline, which formalizes AI risk management in the financial sector.
The President of India approved the merger of Power Finance Corporation and Rural Electrification Corporation on June 10, 2026. This follows PFC's acquisition of a 52.63% stake in REC for 14,500 crores in March 2019. Combining PFC and REC will streamline operations and strengthen financing for the power sector, supporting faster growth and better resource allocation in infrastructure funding. The Reserve Bank of India also cancelled registration certificates of 135 non-banking finance companies, mostly based in West Bengal, cleansing the sector by removing non-compliant or inactive players and promoting healthier financial stability. Additionally, 13 NBFCs voluntarily surrendered registration due to exits or mergers, enabling the RBI to focus on active and compliant NBFCs and reinforcing regulatory effectiveness.
And that brings us to the end of today's episode of the DebtCircle podcast. India's debt markets continue to evolve rapidly from sovereign bond index inclusion and foreign inflows to credit upgrades, large-scale privatizations, and the RBI's proactive stance on both AI risks and MBFC regulation. Major Indian banks are also projected to see a decline in bad loan ratios by financial year 27, with State Bank of India's gross non-performing asset ratio expected below 1% and HDFC Bank's ratio reaching 0.76%, a strong signal of balance sheet resilience. We'll be back tomorrow with more. Until then, stay informed and stay invested.
Thank you for listening.